Wall Street posted its second consecutive weekly rise after better-than-expected jobs data and progress on the US-China trade front boost the investor sentiment. Indian market ends the week on a positive note, supported by favorable global cues on signs of US-China trade truce. The Sensex and the Nifty gain around 0.5% each for the week. CNBC TV18 Newsbreak confirmed Lakshmi Vilas Bank approves merger with Indiabulls Housing Finance. MD of Indiabulls Housing, Gagan Banga, calls the proposed deal an amalgamation. Tells CNBC TV18 that promoter stake will drop from 21.5% to 19.5% after the merger. Narendra Modi trumps Rahul Gandhi as the top choice of the electorate for the Prime Minister's post. 63% respondents of the First Post National Trust Survey pick PM Modi against 13% who choose Rahul Gandhi. The BJP emerges as the most trusted party across 20 states. Hello and welcome to Business Saturday on CNBC TV18. I am Anisha Jain. Well, first up, let's take stock of what happened in the US markets. Well, the stocks there posted their second consecutive weekly rise on Friday as investor sentiment was boosted by better-than-expected jobs data and the progress that has been made on the US-China trade front. CNBC's Rahel Solomon gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks finishing the day higher thanks to a strong jobs report. The Dow up 40 points, the S&P gaining 13, and the Nasdaq higher by 46. The job market bounced back in March. The U.S. economy adding 196,000 jobs and the unemployment rate holding steady at 3.8%. That's according to the Bureau of Labor Statistics. This after February added just 20,000 jobs. Meanwhile, Boeing cutting production of its 737 MAX jets by 20% as the company moves to finalize a fix that will get the grounded aircraft flying again. 737 MAX has been grounded for several weeks as investigators look at the role the plane's onboard equipment played in two separate deadly crashes. Shares of Boeing falling in extended trading. And Apple Music has reportedly surpassed Spotify in paid subscribers. That's according to the Wall Street Journal. This marks a milestone in the race for streaming music dominance. But Spotify still beats Apple with more subscribers worldwide and more users in the United States when free users are included. And that is the action from the U.S. market. Back to you in Mumbai.
Okay, and on that note, hear out what experts have to say about the upbeat jobs report and the road ahead for the U.S. markets.
The employment population ratio, I always look at that. It is down. It's down a little bit. The easiest way to get at that is to look at the people who are not adversely affected by the demographic trends, namely look at the 25 to 54-year-olds. And what's happened there is we have had some pretty good progress there. We brought in about 750,000 of those people over the past year, but over the past couple of months, it's flattened. So it does look like we're starting to reach, I don't want to call it a peak, but we're definitely slowing down in terms of where we're going to see the labor market going.
The bar is much higher coming into this first quarter reporting season than we were at the Christmas lows when companies were coming out and they were originally revising down some expectations. So at 2,900, we think we're a bit stretched, particularly given where we see first quarter earnings. What investors should be doing is thinking longer term. And what we've been advocating is you want to buy offense and defense today and not overpay. The challenge today is defense is really expensive. The challenge is that we're late cycle. So if you just want to go pure offense, we don't think that's necessarily a good idea.
Okay, let's shift focus to the European markets there. Remember, the key markets ended higher as the US posted a solid rebound in job creation in March. The US non-farm payrolls expanded by 196,000, while the employment rate held steady at 3.8%. Moving on then, in the world of commodities, NYMEX crude oil prices rose more than 1% on Friday, while Brent prices settled above $70 per barrel on bullish U.S. employment data that tempered fears about a decline in global crude demand and on expectations that an escalating conflict in Libya could tighten the oil supplies. Well, we told you first and now it has been confirmed. The board of Lakshmi Vilas Bank has approved its merger with Indiabulls Housing Finance. Now, if the deal does go through, the shareholders of Lakshmi Vilas Bank will get 14 shares of Indiabulls Housing for every 100 shares held in Lakshmi Vilas Bank. Also, the amalgamated entity will be 8th largest private bank in the country. MD of Indiabulls Housing Finance, Gagan Banga, has said that the proposed deal is an amalgamation and not strictly a new banking license. Speaking to Lata Venkatesh and Ritu Singh, he added that the promoter stake will drop from 21.5% to 19.5% after the merger.
This is an amalgamation. This is not strictly a new bank license. And if you look at how Indiabulls Housing is placed today, it qualifies under all the norms required even for a new bank license. Most importantly, Indiabulls Housing is a widely held company with over 65% institutional ownership, and of which over 56% is held by foreign institutions.
Okay.
The founder, Mr.
What is the promoter stake, Gagan?
The promoter stake currently is 21.5%.
And how much will it?
After the amalgamation, it will drop to about 19.5%.
Okay.
And during the scheme itself, we will undertake to the Reserve Bank that it will drop to below 15%.
Okay, in some specific period?
Yeah, as the scheme gets approved, it will drop to 15%.
Okay, so before this actual amalgamation, the promoter stake in the amalgamated entity will have fallen to 15%.
Yes.
Okay. Did the Reserve Bank in your previous round tell you why they did not give you a license in 2013?
So it was more a question of, a business plan at that point in time, since the emphasis, as I was made to understand, was to focus around either a rural housing, a rural finance, or microfinance kind of a thing. So there were only two real licenses given, IDFC.
No, IDFC was not a rural license. They gave.
Yeah, I was just coming to that. So IDFC and Bandhan. As I understand, IDFC was a special situation given the issues that were going on in infrastructure, and therefore the need for the right kind of financing for that business to go on. Bandhan was the real license given, which was around microfinance. So rather than delving into, what was the rationale at that time for them to give it to others or not to give to some, I think this is a unique opportunity where there is a very old bank with a good franchise, which has over 25,000 crores of depositors' money. It is in requirement of capital. We are sitting at a very strong capital adequacy and a very strong liquidity. So the case that we are trying to present to the Reserve Bank is that neither the amalgamated entity nor Indiabulls Housing is really requiring any sort of a forbearance for them, neither for SLR, CRR,
Did you
nor
speak
for
to them?
ownership or anything.
Have you spoken to RBI already?
No, we will be applying to them once, now that the boards have approved, we will follow the process.
You didn't sound them informally?
There are two RBI nominee directors on the Reserve Bank of India, Reserve Bank of India on LVB's board. So there has been ample discussion at the board level.
Okay, so you mean they were okay with it, and therefore you assume the Reserve Bank has been
I'm not
sounded.
privy with specifically, what exactly happened in LVB's boardroom. I'm privy to what happened in our boardroom.
Can you give us a parameter by parameter, result if the entity is amalgamated? For instance, what will be the liabilities if the two merged? What will be the capital adequacy if the two amalgamated? And what will be the shortfall in CRR and SLR that the merged entity will have to meet?
So there would be no shortfall in CRR and SLR. The Indiabulls Housing is sitting. We put out an exchange notification, and we've also day before yesterday, and we've also put out a presentation which covers all of this as part of our exchange notification. So we are sitting on over 27,000 crores of cash. A ballpark, I think if we were to amalgamate today, we would have excess cash to the tune of about 10,000 crores over what is the prescribed CRR SLR level. The capital adequacy ratio of the merged entity would be well ahead of 20%.
Okay. And so the non-performing assets on the books, could you give us a sense of that as well? And how that would look for the merged entity?
If the amalgamation is to happen today, the business will have a net non-performing loan of about 2%.
Oh, that will be very positive for Lakshmi Vilas Bank for sure.
Yeah, so exactly my point, Lata. This is also about, how a franchise, which is otherwise on parameters such as branch network, they have over 500 branches, over 1,000 ATMs, over 2 million depositors, over almost 200,000 loan borrowers. So all of that is extremely valuable. What it needs is a complementary capital to come in, and that's where Indiabulls Housing comes in.
Okay, so that's a big deal that is in works as far as the financial space go. But on to the latest from Jet Airways then. The lenders are expected to begin the stake sale process in the airline today. The SBI-led consortium has asked interested parties to submit expressions of interest between April 6th and April 9th, advancing the time frame that had initially been announced. Now, sources have told CNBC TV18 that the EOI, or Expression of Interest document, is yet to be made public though, as discussions are still ongoing. It is likely to be made public later today. Remember, CNBC TV18 was the first one to report on March 28th about the potential bidders that have approached lenders. Private equity players like TPG, which has interest in the aviation sector, National Investment and Infrastructure Fund and Etihad Airways have held informal preliminary discussions with the lenders, sources told CNBC TV18. Another private equity player, Indigo Partners, had earlier in 2018 shown an interest in acquiring stake in Jet Privilege and may be approached again by the lenders as per sources. Now, sources also said that TPG, Indigo Partners and NIIF may even submit a bid jointly to acquire stake in the airline. Air France, KLM and Delta Airlines have also been approached by the lenders, but it is still unclear if they will submit an expression of interest, a senior banker told CNBC TV18. Well, from aviation to telecom, Vodafone Idea is gearing up for its 25,000 crore rupees rights issue, which will open on the 10th of April. The management of the company is confident of keen interest from existing as well as new shareholders for the upcoming rights issue. In an exclusive interaction with CNBC TV18's Lata Venkatesh and Reema Tendulkar, company CEO Balesh Sharma and CFO Akshay Mundra talked about the reasons that give them the confidence regarding the rights issue and said that at 12.5 rupees a share, the pricing is attractive for the shareholders.
We are a very new company. We've been, since the time we created the company, interacting with analysts, with journalists, but also very importantly with investors, existing and prospective. We met them in November, December. We met them again after the quarterly results, so about last month. Great interest. People understand the strengths of the company, the outlook on the market, and very clearly our strategy and support that. So we have good interest from the investors for sure.
Would you agree, Akshay? I mean, especially because Axiata, there was a buzz that they want to not subscribe.
So let me put it this way, that we met investors both who were existing shareholders and some of them who are not shareholders, but they've also been meeting us, and we've seen a keen interest from both categories of investors, both existing shareholders and new investors. So there's a strong interest, as Balesh was saying, and we met a number of investors in 2 rounds of roadshows. So very, very strong interest.
Balesh, what was the feedback from the shareholders on the pricing at 12.5 rupees per share? Because 14 months ago, in February of 2018, when you raised money, it was at 82.5 rupees. In 2014, it was a price of 134 rupees per share. So shareholders have lost money in the company. So what was the feedback from them on the pricing?
So very clearly, well, we haven't gone asking investors or shareholders' opinion on price per se. However, the price has been calculated to keep it attractive for the shareholders, so as to give them an opportunity. As also keeping in mind the industry and the past history of rights issue. Remember, this is the largest rights issue the country has seen.
Yes.
But again, the pricing has been with the amount of equity that we are raising versus the existing capital is again one of the largest proportions. And therefore, the price that we see has to be seen versus the TERP and not versus the market price. Because the market price anyway gets diluted by whatever discount you do to come to the TERP. And versus TERP, it's a discount of 32%, pretty much in line with the practice on rights issues.
Okay, so Vodafone Idea gearing up for the rights issue. But moving on, e-commerce giant Amazon has partnered with crowdfunding platform Ketto to help sellers raise funds for business development, product development, and even for medical assistance. Sellers will be allowed to use Ketto's platform to raise small ticket funds. Gopal Pillai, the VP Seller Services of Amazon India, also spoke to CNBC TV 18's Priya Sheth about the impact of the FDI policy on e-commerce on this seller community. Take a look at that.
Sellers can ask for the same as low as 50,000 rupees to say 5 lakhs, 10 lakhs. We don't really have a goal on how much we want to raise or how much we wanted to, how many products we wanted. We wanted to create an environment that kind of enables and empowers people to leverage this partnership. We haven't seen any impact to our sellers. Sellers are continuing to sell. We didn't see any dip in sales or dip in new sellers joining the marketplace. For example, last year around Q3 we had 4 lakh sellers. Today we have more than 4.5 lakhs of sellers.
Well, BharatPe, a fintech startup that provides merchants and small businesses with interoperable UPI QR codes, has raised $15.5 million Series A round from Insight Partners, Sequoia India and BNext. Now, BharatPe was founded in 2018 by Ashneer Grover and Shashwat Nakrani, and this round is being touted as the largest Series A financing for any Indian startup. CNBC TV 18 Saina Dhenogra caught up with Ashneer Grover and began by asking him how BharatPe's UPI-based QR technology and services are differentiated from other big players in the market like PhonePe and Paytm. Take a look.
Earlier, in fact, what would happen is that every payment company would run a closed loop network. And that would mean that they would need to own the customer and the merchant both. And therefore, the QR code that a payments company would put at the merchant would only work on their app. What we have brought in is an interoperable UPI QR code. So therefore, when the merchant gets onboarded onto our system, thereafter, he doesn't need to interact with any of the payment companies on the consumer side. And despite that, every single payment option which is on UPI will work on that UPI QR code.
Okay. Can you please talk us through your numbers, Ashneer, the number of transactions that you facilitate, and ideally, if you can contextualize this for us in the broader context of UPI data that's released by NPCI. How do you stack up against PhonePe, for instance, who is also very aggressively targeting this merchant space now?
On a monthly basis, we do 1% of all the UPI payments which happen in the country. On an estimate basis, that would mean that we are doing more than 10% of all UPI merchant payments in the country.
Okay, so let's talk about what you've been in the news for, the $15.5 million fundraise. What are you planning to use the money for?
We are very excited to build the next layer of technology and next layer of products for the merchants, which make it even simpler for them to do their business. And when I say their business, I'm not speaking only about accepting payments, but even even things that they do beyond payments, and these are things which we will over time sort of come out with.
And what's your monetization strategy around this? Is it commissions from merchants or the businesses that you have on the other side that are using your services?
I'm very, very clear that the way the network is being evolved in India and the kind of players that are operating in the market, eventually the MDRs on payment, whether it is on cards or on UPI or closed loop wallets, are all going to tend towards zero.
From our mutual fund corner then, here is the next episode from our special series MF Simplified on Know Your Customer. Take a look.
Sumera, did you see this news? Apple actually wants to get rid of the iconic fingerprint sensor and move all its products to face recognition. Of late, several phones actually have this feature of face recognition, right? I think that's because of customer safety. In the mutual fund industry, From a customer recognition perspective, there's something called the Know Your Customer, abbreviated as KYC. Even if somebody had actually done his KYC in the year 2000 or after 2012, there was a rule saying that an in-person verification is mandatory. So you'll have to redo your KYC so that the mutual fund company actually recognizes you, and an in-person verification helps and facilitates that.
That's right, Feroz. In fact, starting the 1st of January 2012, almost every category of investor has to comply with the KYC norms if they want to transact in mutual funds. So you will have to submit all of your details to your AMC or the asset management company. AMCs are required to formulate rules and implement a customer identification program in accordance. It's a one-time activity, and you can invest in any AMC once you're KYC compliant. You can invest in mutual funds only through KYC compliance. It can be done online and offline.
I noticed you mentioned most investors need a KYC, with an exception of a concept called micro systematic investment plan, which means that if an investor, all asset management companies put together, is investing only below 50,000 rupees in a financial year, he can exempt or she can exempt herself from a KYC documentation. Secondly, if you have lump sum investments, irrespective of size, even if it's a 5,000 rupee investment, you are mandated to actually take up this process of documentation of KYC. The mutual fund investor needs to get compliant, KYC compliant with any of these following agencies: CVL, NSC, NSDL, CAMS or CAVI. A KYC form needs to be downloaded. Details need to be filled out as instructed. Once your self-attested copies are submitted, you would need to carry originals like proof of identity such as passport, Aadhaar, voter's ID or driver's license, proof of address, third, PAN card, and passport size photograph for in-person verification.
And it's also important to remember that you don't have to pay any sort of fees for registering your KYC. Another interesting aspect to remember is that if you're looking to do Aadhaar-based KYC, then that will make you eligible only for an investment up to 50,000 rupees. And you'll want to know that a lot of the AMCs also allow you to do your in-person verification via video conferencing facilities. Well, that's some convenience, isn't it? But you know what always happens is that complying with the original norms is not as difficult as if you want to make changes in it.
Love your practicality. Changes are going to be a part of life, and if you have status change, if you have a name change, address change, or even if you have a signature change, you will have to download a specific form, submit it at the KYC center, quote your PAN number and give the proof of the change. And it takes about 10 working days for that change to reflect in your KYC.
And you know, Feroz, this is actually very pertinent because I don't think we've even touched the tip of the iceberg as far as getting the KYC done for everybody in the country, right?
Yes, I think we have 138 odd crore population and we might not have more than 2 crores unique investors. So we will be doing 5 times more the KYCs in the next 10 years than in the past 10 years. So I think it is a pertinent topic and all these new investors need to be told about KYC compliance.
All right, so if you haven't done your KYC yet, we hope you'll do it today.
So when we have bulls and bears, the stock market can't be far behind, right?
The name bull market actually is derived out of the way the bull attacks its opponent, uses its horns and throws the opponent right up in the air. Just like how the stock market moves the prices of all the stocks right up in the air.
Well, with that, it's curtains down on this edition of Business Saturday. From the team and myself, thank you so much for watching.